Welcome to Charged Alpha. I'm Hudson, joined by Lana. Today's chapter, Live Nation Entertainment, the vertically integrated live entertainment platform that controls concerts, venues, and Ticketmaster.
Live Nation was created in 2010 through the merger of the concert promoter Live Nation and the ticketing giant Ticketmaster. The combined company became the dominant force in the live events industry.
The business has three segments. Concerts is the largest at roughly 70% of revenue. It books touring artists, operates amphitheaters, clubs, and arenas, and produces festivals on every continent.
Ticketing accounts for about 25% of revenue. Ticketmaster is the largest ticketing platform in the world, processing tickets for sports, concerts, theater, and live events across 40 countries.
Sponsorship and advertising is the third segment at roughly 5% of revenue, but it is high margin. Brands pay for access to the most engaged live entertainment audiences on the planet.
The moat is a three-part flywheel. Live Nation books the biggest artists, which fills its own venues, which generates tickets processed by Ticketmaster, which generates data that attracts sponsors.
The venue portfolio is a physical moat. Live Nation owns or operates over 600 venues worldwide. That real estate and community presence gives it permanent leverage over local promoters.
Key metrics for understanding this business are fans attended, roughly 145 million per year, and the average revenue per fan across ticket sales, merchandise, and concessions at company venues.
Ticketmaster's data asset is underappreciated. Hundreds of millions of registered users form a targeting database for brands seeking affluent, entertainment-spending consumers.
The DOJ filed an antitrust lawsuit seeking to force a Ticketmaster breakup. The legal process is long and the outcome uncertain, but the regulatory overhang is real.
Michael Rapino has been CEO since 2005, 2 decades leading the company from a regional promoter through the Ticketmaster merger to a global entertainment operator.
Rapino's vision is expanding Live Nation's share of total live entertainment value, not just ticket face value, but every dollar a fan spends around the event.
Live Nation pays no regular dividend, consistent with its growth reinvestment model. Free cash flow is directed into venue acquisitions, festival development, and artist relationships.
Seasonality is important. Q1 is the weakest quarter, pre-concert season, while Q3 is peak when summer tours and festivals generate the bulk of annual revenue.
The competitive landscape is highly fragmented below Live Nation. AEG Presents is the closest rival in concert promotion, but it is private and lacks Ticketmaster's reach and venue portfolio depth.
International expansion is a major growth driver. Asia, Latin America, and Southeast Asia have rapidly rising middle classes with growing appetite for live entertainment experiences.
Live performance cannot be replicated by streaming. A concert is one of the few remaining scarcity premium products. The experience itself is the irreplaceable product.
Concerts, venue portfolio, Ticketmaster data, and an internationally expanding fan base, Live Nation has built a platform around live entertainment that compounds on itself year after year.
That is the company chapter for Live Nation Entertainment, the world's largest live entertainment platform connecting artists, fans, venues, and brands at a scale no competitor approaches. This is Charged Alpha.
Artist flywheel, venue depth, and 145 million annual fans. Let's see how the seasonality and business model are showing up in the latest numbers.
Live Nation delivered one of the standout earnings beats of this cycle. Q1 2026 adjusted EBITDA hit $540 million, 60% above the $338 million estimate. Revenue of $3.79 billion beat estimates and rose 12% year over year. The GAAP EPS loss of $1.85 reflects one-time DOJ settlement costs, not operating weakness. This is Charged Alpha. I'm Hudson.
And I'm Lana. Live Nation Entertainment is the world's largest live entertainment company operating across 3 segments: concerts, ticketing through Ticketmaster, and sponsorship and advertising. Formed through the merger of Live Nation and Ticketmaster in 2010, the company promotes over 40,000 events annually and operates or manages approximately 350 venues globally. The live entertainment business benefits from structural demand growth as post-pandemic consumers prioritize experiences over goods. market cap is approximately $38 billion.
CEO Michael Rapino has led Live Nation since 2005 and is the architect of the flywheel model. Concerts drive Ticketmaster ticket sales, which attract advertisers and sponsors, which fund venue expansion. Rapino has expanded Live Nation from a regional concert promoter into a global entertainment infrastructure company connecting approximately 145 million fans to live events each year.
Starting with Live Nation's financials, Q1 2026 revenue of $3.79 billion topped the $3.57 billion consensus estimate by 6.2%. Year over year, revenue grew 12.2% from $3.38 billion in Q1 2025. Q1 is seasonally Live Nation's lightest quarter. The summer concert season generates the majority of annual adjusted EBITDA.
Adjusted EBITDA of $540 million beat the $338 million estimate by 60%, a $162 million positive surprise. For Live Nation, adjusted EBITDA strips out legal and non-recurring charges to measure operating performance. The Q1 beat reflects early season concert calendar strength that analysts meaningfully underestimated heading into the print.
The GAAP EPS loss of $1.85 reflects elevated legal expenses tied to the Department of Justice antitrust settlement. DOJ resolution costs are booked as a one-time charge flowing through GAAP earnings. The adjusted EPS of 8 cents beat the negative 32-cent estimate, a significant positive surprise on the operating basis that investors use to value the live entertainment business.
The concerts segment is Live Nation's revenue engine. It books touring artists, fills venues, and generates ticket revenue. The ticketing segment, powered by Ticketmaster, earns per-ticket fees on primary and secondary sales globally. The sponsorship and advertising segment monetizes the aggregated audience. Revenue growth of 12% in Q1 reflects higher average ticket prices and increased event volume relative to Q1 2025.
The balance sheet shows approximately $7.1 billion in cash against $12.4 billion in total debt, a net debt position of $5.3 billion. Live Nation's capital structure reflects the investment required to control venues, secure artist relationships, and maintain the Ticketmaster platform. GAAP operating margin turns slightly negative in Q1 2026 due to the non-recurring DOJ legal charge.
Management reaffirmed the 2026 concert pipeline targeting approximately 145 million fans, a record level representing meaningful growth over 2025. The full-year outlook is weighted toward the summer concert season, which historically generates 70 to 80% of annual adjusted EBITDA. Q1's 60% outperformance provides a cushion against any second-half disruptions.
The analyst community's post-earnings reaction is broadly constructive. Analysts who build price target models for Live Nation use adjusted EBITDA as the key valuation input, not GAAP EPS, because DOJ legal costs are non-recurring. A 60% EBITDA beat is large enough to drive price target upgrades, though the DOJ consent decree overhang keeps the consensus closer to hold than an outright buy.
The constructive analyst view positions Live Nation as a toll booth on global live entertainment. Every concert ticket sold globally, by Live Nation or by venues using Ticketmaster infrastructure, generates a fee. The flywheel compounds as more venues join the network. Bulls argue the consent decree terms are less restrictive than feared and leave the core monetization engine structurally intact.
The skeptical view centers on the DOJ consent decree. The antitrust settlement restricts Ticketmaster from bundling and exclusivity practices that historically locked venues into the Live Nation ecosystem. Analysts who model meaningful competitive erosion in ticketing see the consent decree as permanently impairing the revenue quality that justified Live Nation's premium valuation multiple.
Live Nation's revenue seasonality complicates Q1 analysis. Operating leverage concentrates in summer. The Q1 adjusted EBITDA beat may reflect favorable early season timing rather than a full-year structural improvement. Analysts weight summer performance more heavily than Q1 results when updating price targets, which means the true earnings validation happens in Q2 and Q3.
The 1.5 times trailing sales multiple reflects the market's attempt to balance Live Nation's dominant position against the DOJ discount. Live Nation's flywheel businesses, concerts, Ticketmaster ticketing, and sponsorships, compound revenue and operating leverage together. Analysts who believe the consent decree has limited structural impact model significant upside from pricing power and global venue expansion. Those who model competitive disruption view the current multiple as appropriate.
The bull case for Live Nation rests on the global concert pipeline. Management targets 145 million fans at live events in 2026, a record that would represent double-digit growth over 2025. Post-pandemic live music demand is structurally growing as entertainment spending shifts toward experiences over goods and streaming content.
Ticketmaster's dynamic pricing technology is the financial bull case for margin expansion. Raising average ticket values when demand exceeds supply directly expands per-transaction economics. The verified fan program reduces scalping and captures primary market revenue for Live Nation rather than allowing it to flow to secondary market operators outside the ecosystem.
Venue expansion is Live Nation's long-term compounding mechanism. Adding amphitheaters and stadium capacity in growing markets increases annual promotable events. Each venue is a long-duration asset generating concert, ticketing, and sponsorship revenue across decades. The infrastructure moat deepens with every facility added to the global network.
The bear case for Live Nation leads with the DOJ consent decree. The antitrust settlement restricts Ticketmaster from exclusivity arrangements that historically locked venues into the Live Nation ecosystem. Bears argue these restrictions will enable competitors, SeatGeek, AXS, and venue-operated systems to take primary ticketing share from Ticketmaster over time.
Legal expense quality is a recurring concern. The GAAP EPS loss of $1.85 against adjusted EPS of 8 cents represents a substantial gap. While DOJ settlement charges are classified as one-time, antitrust compliance infrastructure and ongoing oversight costs can persist for years and are difficult to forecast with precision in a model.
Consumer discretionary spending is the macro risk. Live Nation tickets are a significant discretionary purchase. When consumer confidence weakens, attendance softens and average ticket yields compress. The summer 2026 season depends on willingness to spend at elevated ticket prices in a macro environment with persistent uncertainty.
Artist concentration creates revenue dependency. A small number of globally touring acts drive approximately 80% of Live Nation's ticket revenue. If key artists reduce touring frequency, postpone shows, or shift to competing platforms, the concentrated revenue base can compress faster than the diversified venue and ticketing infrastructure can recover.
Live Nation's peer set in live entertainment is limited by its scale dominance. Direct comparisons include MSG Entertainment and Sphere Entertainment, which operate premium venues but lack Live Nation's national and global scope. In ticketing, SeatGeek and AXS compete with Ticketmaster but are private companies without comparable transaction volume or venue relationships.
Spotify represents a platform-level competitive concern rather than a direct peer. Spotify's marquee concert program and live event expansion position it as a potential entrant into Live Nation's flywheel. Analysts who model Spotify moving into primary ticketing and promotion view it as the most credible long-term platform challenge to Live Nation's integrated concert-to-ticket business model.
TKO Group, parent of UFC and WWE, competes for the same consumer entertainment spend as Live Nation. TKO's arena and stadium footprint overlaps with Live Nation venues, creating competition for premium live event dates and corporate sponsorship budgets. TKO's global content distribution adds a digital revenue dimension that live concert promoters have not yet fully developed.
On valuation, Live Nation at 1.5 times trailing sales trades at a premium to pure concert promoters but below pure platform businesses. Ticketmaster's platform economics justify a multiple above traditional entertainment promoters. The DOJ consent decree discount creates a ceiling on how far that re-rating can go. Analysts who model the decree as manageable see meaningful upside from the current level.
Live Nation's options market activity heading into Q1 earnings reflected uncertainty about the GAAP versus adjusted earnings gap. With GAAP EPS widely expected to miss due to DOJ charges, options market positioning focused on the adjusted EBITDA outcome, a metric requiring analysis beyond the headline numbers. Pre-earnings implied volatility was moderate, consistent with an entertainment name carrying event-specific rather than ongoing macro risk.
Post-earnings implied volatility collapsed after the adjusted EBITDA beat resolved the event uncertainty. The 60% EBITDA upside drove a constructive price reaction. Investors holding calls through the earnings event benefited from both the directional move and the volatility compression. LYV Nation's beta of 1.15 reflects above-market sensitivity to consumer spending and entertainment cycles.
Insider activity at LYV Nation reflects CEO Michael Rapinoe's 20-year institutional equity commitment to the business. Scheduled plan transactions are the primary filing pattern. No notable open market purchases ahead of the Q1 print, consistent with a management team building long-duration infrastructure rather than making directional short-term equity commitments.
The combined read from options and insider data is neutral to constructive. Post-earnings implied volatility collapse and the EBITDA beat resolved the key event risk. Insider transactions follow standard scheduled plan patterns without open market conviction buying. The investment thesis for LYV Nation turns on the concert pipeline and Ticketmaster monetization, both of which Q1 results validated.
LYV Nation's Q1 adjusted EBITDA of $540 million beat the $338 million estimate by 60%. Revenue grew 12% year-over-year. The GAAP EPS loss reflects one-time DOJ costs.
Bottom line, the concert pipeline is at record scale, and Ticketmaster's monetization engine is intact. The DOJ decree is the discount, not the thesis. The summer season is the catalyst.
Financial data and charts sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.